What's going on, guys? It's the Bulls and the Bears here with a weekly game plan video where I go over my picks, my plan for the next week when it comes to selling options as part of the wheel option strategy. So I only play weekly, so I'm just looking for 1 week of price action. I have 4 names here on my sticky note that I'm going to go over. A few of them have earnings, only one doesn't, and that's actually the one on the screen, DOCU. So I have everything laid out, the strike that I want to play for this week, and I'm going to go over the premium that we can collect and the risks that might be involved in it. So, starting with DocuSign. DocuSign is actually a higher price stock. It wasn't on my screener because it was above the price threshold that I was looking for, but I am familiar with it. I have seen a lot about it, and I do believe it's just undervalued. Look at this. Now, just because the chart looks like this doesn't mean it's undervalued or anything. Like Netflix looks like this, Zoom, Roku, all of those like COVID benefactor names look like this. Stuff like Zoom and Roku belong down here, right? They were only a product of people staying at home, and now that's over for the most part. DocuSign, not so much. DocuSign definitely rallied during the pandemic because people were working from home. Therefore, they had to get things signed digitally with DocuSign. However, I can speak from experience in saying that this hasn't gone away. Just because people are back in the office doesn't mean DocuSign's done. It's a great tool. You don't have to leave your desk and track someone down to get a signature. You can just send it to them through email, which is what DocuSign does, and they can get to it when they can get to it. Or they can sign it off from their phone wherever they are, if they're in a meeting or they're on the road or something. So DocuSign is a good company. It's not going away. I don't think it belongs to be way down here. So as an investment, I like it. Therefore, I won't be mad if I get assigned. The only thing is that now that I look at it, it doesn't pay dividends, which is one criteria I do look for in my cash secured put plays, because if I'm going to hold shares, I might as well collect dividends while I'm selling premium. But I think this is a good name to own regardless. It does provide some good moves as well. I mean, this move right here was from 73 to 120, so a $50 move in a couple weeks. Even just this week, the range is upwards of like $7 to $10. So it can move quite a bit, which is also a risk to us when we're selling options. Because if we don't want to own it, or if we ideally just want the put to expire, the volatility is going to be a little bit scary to us. But because I don't mind owning this thing, I don't care about that volatility. I'm looking at the 67.50 strike. That's about $7 away from the current price. If it does get below here, we have this monster area of support that I would expect would hold up. And even if it dips down like $5 below the fill price that we get, it's still going to be in this high traffic area, high volume area where I expect it to bounce. It's been making higher lows every single time in this zone, and we finally broke out of it. We're chilling up here. I don't even think we're going to drop down below this area, to be perfectly honest. But if we do, we have all the support in our favor. We also have the 50 moving average right here. It's this blue line, which touches exactly at our cash secured put strike at 67.50. So even if it does drop, the 50 moving average could help us out there. Let's just check the weekly chart just to be safe. Nothing crazy. The 67.50 level actually was support way back here, so that's good to know. That's been some support in the past, back in 2019, 2020. It was kind of support back in March, support in May. It was resistance just recently, and now finally we're back above it, where you'd hope to see it act as support. So I like the 67.50 strike. You can even do 68 if you'd like. 68 is paying $48 right now. 67.50 paying $40. By the time Monday comes, another day off of the contracts, depending on the gap too, the premium's probably going to be lower, but it should be above my minimum of $25. I might bump up to 68 to get more premium, but at the end of the day, it should pay enough to where I'm going to do it and sell that contract. And there's not any earnings or anything either, so I'm liking this name a lot. DocuSign at 67.50. The next one I'm going to look at is ZIM. I've talked about this kind of frequently because it does have some big moves and therefore has some solid premium out of the money. However, this one does report this week. It has earnings this week. Looks like on the 17th, which is Wednesday. So ZIM reports on Wednesday. I'm looking to play the $44 strike. That's way down here. And because of earnings volatility. That strike is paying about $40. So solid premium, way out of the money, but that's because of the earnings risk. But that is at the end of the day, it is over 10% out of the money. So that's a pretty safe area. On top of that, look at the support that we have at 44. Last time it was down here, it held up strong. Even way back here in 2021 or early 2022, we saw 44 act as support too. So I'm thinking it'll be all right. That's if it has bad earnings to begin with. I'm thinking it'll do well. I'm looking at the financials on this company. It's been increasing every single quarter. The net income, net revenue has been increasing. This thing's been doing pretty damn well. It is a Israel company, so it's not U.S. based, which is something that I do try to stay away from. But I mean, I just played a Brazilian company. I played ZIM in the past, so I guess it doesn't scare me away that much. Looking at the analysts, some say 25% say it's a strong buy. A lot of them say hold, and maybe one of them say underperform. The low analyst target price is $40, which would only be $4 away from the cash secured put strike that I'd play. Not really putting too much weight into this. I don't even know who these analysts are. There's only 8 of them, so I look more so at the financials, and they've been doing well. They're a shipping company, and I don't see a reason for that to really have a terribly bad earnings report. So I don't mind this play, but after all, it is risky. Earnings is a risky play to sell puts around, so I don't blame you if you don't play it. But all the rest of these names are going to be earnings plays. At the end of the day, you can get some good opportunity on these types of plays. So that's ZIM at $44 strike for selling a cash secured put. Next, we're going to look at Tapestry, another earnings play. This has earnings on the 18th, which is Thursday, right? Yep, Thursday. I'm looking at the 32.50 strike. Definitely some support, at least the past couple months. Even in July, we've been bouncing off 32.50, up and down, up and down. Finally, we kind of got out of that rut where it's starting to move up now. Earnings volatility, though, I'm able to go to the 32.50 strike and collect about $40 premium, which is not that bad. It's a cheaper stock, $32, so it's affordable. I could even go 2 contracts if I wanted to. Tapestry is a modern luxury accessories and lifestyle brand. The company operates 3 segments: Coach, Kate Spade, Stuart Weitzman. So definitely some higher end products, which is a segment that I don't think is going to be hurt this much by inflation, by oil prices and gas prices going up, because at the end of the day, this is a luxury brand. The people who are buying this stuff are people who have money and aren't that affected by the inflation and stuff. So I don't see this having a terrible earnings result. Even if it does, it might not drop all the way down to $32.50. That would be about a 10% drop. That would be a $3 move, which would be about 10%, 8%. So I think this is an all right level. I like this better than ZIM, I believe. I look at the analysts. Everyone loves it. No one says, there's 23 analysts this time. Strong buy, hold. No one says sell. The low analyst target price is $31, and I'm looking to play the $32.50, so I wouldn't be that far off anyway. Financials look solid. They seem to be a good company. They've been around a while, and I'm liking that level, $32.50. They've been around since 2000. And the last one we're going to look at here today is Foot Locker, another earnings play. It is cheaper than all the rest, so that's good. It's more affordable. I'm looking to play the $25 strike, which is $6.50 away from the current price. That is that 20%? $31.52 minus 25, that's $6.52. Divided by the current price, that's a 20% move. Or the strike is 20% out of the money, and it would need a 20% drop for us to get assigned. Even if that happens, we do have some nice support down here. We found a nice bottom at 23.70 as a low, 25 is kind of a high of this little range right here before we broke out of it. If I zoom out further, look at the weekly chart, look at this, way back here in 2020. We found much support down here at 25, 26, 27 with a lot of lower wicks. So this is definitely a solid area of support. Even as we came close to it more recently, back in February, again, held above it. We only went below it for a little bit of period of time, only a couple weeks, and then we pushed right above it. So not only would Foot Locker have to have bad earnings, but it would have to drop 20% for us to get assigned. And for us to be in real trouble, it would have to drop even more than that, like down to $20 or something for us to really be, in the hole on the shares. The premium right now looks like at the 25 strike is $20. And since it's $25 and not something like $50 per share, I can sell 2 contracts. So with a quarter of my account, I can bring in like $40 to $50 premium, and that's perfect. So that's what I'm looking to play. I like this one a lot, even though it is an earnings play. I like this one a lot because it's so far out of the money. And I can sell 2 contracts, and there's a lot of support in our favor. Even if it does drop, that should hold this thing up. So those are the plays. Foot Locker here at $25.50, Tapestry at $32.50, ZIM at $44, and then DocuSign at $67.50. So the earnings plays are risky. I would say ZIM is probably my least favorite. Tapestry, although it is an earnings play, I do like it a lot because I think it'll hold up. Foot Locker I like a lot as well because of how far out of the money the strike is. And DocuSign I love because it's something that I would like to own. It doesn't have earnings, and I think it belongs higher than this. I really do. I think it'll hold up anyway. We have some nice support. I really don't think I'll end up even getting assigned on it, but if I do, I think I'll be happy about it because it does make some nice moves. It's something I wouldn't mind owning. It's affordable. I could definitely hold 100 shares of this and still have plenty of other cash to play the wheel on other names. So I'm liking that. DocuSign, probably my favorite, then Foot Locker, then Tapestry, and ZIM is my least favorite. So that's it, guys. That's going to be the game plan for this week. If you want to see exactly what I do, you want to follow me on Twitter. Link in the description, because sometimes when Monday morning comes, the lay of the land with the options premium and the current price of the stock, that all changes. Theta happens, gaps up happen, and premiums change. So I might not do all these plays. And if you follow me on Twitter, you'll see exactly what I ended up doing, because I tweet out every single trade that I make, every open, every close. So if you want to know for sure, follow me there. If not, just wait till Wednesday when I give you my midweek update video. If you're interested in joining Webull, I should probably be saying this more often, I have a link in the description there, a referral link. You sign up with Webull. Using that link, we both get some free stocks. We're all happy there. Webull's great. I love this platform. I've been using it for years. Great charting too. You don't even have to really sign up. If you have another broker for buys and sells, you can use Webull for free just for their charts, and it's pretty good stuff. So anyway, that's gonna do it for this video. Thank you guys for watching. As always, like the video, subscribe for more content, and I'll see you all next time.